Guys, I'm a guy that is straight to the point. I don't really like to say, to talk about some bullshit or try this, try that. I'm gonna tell you exactly what I do, pinpoint what I do every single day to scalp 10, 15 points. And this, my focus on this mentorship is exactly this. Tell you exactly straight to the point, exactly how I find those models, okay? So what I do is I scalp the H1 model, okay? So I track, so first thing I do, I track the H1 candle, okay? What does it mean? I have two models, okay? Which is, the first model is the continuation. So right here I have continuation, which is only a pattern where you can see price closing above the previous candle's high on the H1. Okay, what does that mean? It means that the chances of us taking out this high, the upwick here, when we close on this H1 candle is more than likely 80% chance of seeing a candle close on the H1 and see open high into that H1 candle here. Okay, reasoning for it is that at the end of every single hour, this candle most of the day is the biggest candle that is going to be closing on the chart. And what does that mean? It means that every single algorithm institution will be looking at this candle and position themselves with how this candles look. Okay, this candle looks bullish above the opening price, so a lot of people are going to be exiting their trades at this high, okay, who are inside of this candle, and a lot of people are going to want to short above this high here. So the pool of liquidity as soon as this candle closes is not inside the candle, it's always at the upwick here. Okay, so a lot of liquidity is sitting up there. A lot of liquidity, and this is exactly what you want to target at the end of every single hour. So here, this is the continuation setup, and this is the thing, this is the model basically that I want you guys to master first before we go to the reversal. There's going to be three models that I will share with you guys, and these are the exact three models I play every single day. I don't play other models than that because the markets tend to be more difficult for certain models when it comes to scalping, and it's harder for the psychology, so I will just stick to that. Okay, so continuation, closing above the previous candle's high, right here, close above previous candle's high, and you're trying to target, this is your drawn liquidity, target this high, okay? So I'll take a screenshot of some pictures that I will make here. So basically what I'm doing is tracking the H1 candle. Continuation, if we close above the previous candle's high, I'm trying to target the high of the same candle that just closed. Okay, that's pretty straightforward. Then second point, I only trade on the last 10, first 10, last 10 minutes, and first 10 minutes of every hour. Reasoning for it is that this is when the macro happens. This is when there's going to be sweeps of liquidity and manipulations in order to have enough fuel to get back towards this high here. Okay, so I only trade from last 10 minutes and first 10 minutes of every hour when I'm trying to trade the continuation and reversal pattern on the H1. Okay, that's super important. And then so is there any questions for now? Just want to know if it's pretty clear, or if you guys have any questions. You guys have any questions on that?
Does it matter like what time period, or this is just specifically like the first and last 10 minutes of every hourly candle?
You can trade London, Asian, anything that you want. Okay, it could be literally any candles. You could trade Bitcoin with that if you want. But for me, I like to trade NQ, New York session, because it's just so volatile, and the percentage and the probabilities of the up wick / down wick of the H1 candle to get taken out when I'll give you the parameters that I'm looking for is just insanely high. The win rate is 80%, 78% on most trades, okay, most months. So that's basically what I'm looking for here. First, track H1 candle, trading from last 10, first 10 of every hour, okay? I will give you the indicator that I'm using. It's this one, next macros kill zone, and I put these hours in. If you want to have it, it's probably going to help you to understand when the sweeps are going to happen, and just make you not trade inside the chop. Just wait for this time, okay? It looks like this on the chart. If I go on the 1 minute, so like this, and so right here would be, you would wait for the manipulation. We'll go with the examples in a little bit, okay? So right here for now, we stick to this. What time frame was I on? Okay, probably that one. Okay. So perfect. So there is two possibilities, two models that I want you guys to play. Two possibilities basically. Okay. So right here, the first one is that you see the manipulation in the first the first portion of the macro, so the last 10 minutes of the hour, okay, which means that it's from 50, so 50 to 00. Okay. So this is the first, and on this one you will need, so since the manipulation is in the last 10 minutes of the hour, you will not wait for the close of that candle to position yourself. So you need to position yourself before the close. Premature entry. That's super important. Okay, that's the first manipulation in the last 10 minutes of the hour from 50 to 10 to 00, and the second one is manipulation in the first 10 of the hour. So you position yourself after the close. Okay. Is that clear or no? So there's two possibilities. First, we manipulate in the last 10 minutes of the hour, so we need to position ourselves prematurely. And second one, we manipulate in the first 10 of the hour, so in the second portion of the macro, which is going to be from 00, sorry for here, to 010. The fuck? Okay, I got that, my fault. 0 to 10 here. Okay, so that's what it's going to look like. So let me show you an example just with the arrows of what it should look like. Okay, how can I get rid of the price action here to my left? Can I get rid of that? Okay. So for now, these are the information that are super important. Okay, and right here, two possibilities. So it's gonna look something like this. Okay, so it's either you close above the previous candle's high and it looks like this. I'm gonna sweep the low. This is your entry and this is the high. you're trying to target. This is the sweep, and the sweep is made at the first portion, so right here. So from 50 right here. Okay, so that's sweep. Or you make the exact same thing, but the sweep is at this time right here. Super important. Okay, so you're always trying to target a high on the H1, okay, that is closing, and then you're trying to look for your manipulation to happen either first 10, either last 10. Okay, this is what you need to put in your head in the first few weeks of the mentorship. Okay, let me just put that smaller like this so you can all have it in the picture. Right here. So let's do a little picture that we'll send you guys. So we're gonna go through the entry models after, okay? But for now, you need to understand this is the biggest principle. You need to be able to track the H1 candle, and you need to be able to track it really soon, okay? I don't want you guys to be like, oh, I'm gonna take time. And guys, the faster you are able to understand how to track it, the faster you will be able to make money. Okay, and I will show you exactly how to do so right now. So take a picture of this. I'll take a picture of this and send that in the chat right here. So boom, here's the picture. Send it in the chat. So perfect. For now, these are the most valuable information that you can get in terms of just understanding the model. Okay, so for now, let's go back here, and just before that, do you guys have any question on what I said? Just so nobody's left behind. Perfect, so if nobody has a question, let's just go. So how do I do to track my H1 candle? It's pretty easy, pretty straightforward. So what I do is exactly this. So if we close below the previous candle's low, I am trying to target the low of the same candle that just closed below the previous candle's low. Okay, there's going to be a transition between this H1 candle closing and a brand new one opening, and this is exactly the move you're trying to eat from. Okay, what I'm telling you basically is that when the next candle is going to be opening, okay, right here, it's easy to recognize if price will target this low here or not by what happened in the first 10, last 10 of every hour. So what you want to do here, let's say you're tracking it, close below the previous candle's low. You know this low is where the liquidity is at. Every single people want to sell. Every single people have a sell limit order right here, a buy limit order right here because they sold. Sorry, so they want to get out of the position, and a lot of people want to go long here in another position because we are absolutely in discount. Okay, so most of the limit orders at this time on the biggest candle that is currently closing is here. So this is what you're trying to target. So what you would look for, you would scale down to the 1 minute chart and look for a sweep of liquidity. So basically the opposite of what most people are looking for. What most ICT traders are looking for is price to get in the bottom of a range, 2022 model, long from here, and they would get smoked. And what I'm telling you guys is to enter in the opposite of that, because this H1 candle is closing, so this low is a 80% chance target, 80% chance of being targeted basically. Okay, so the opposite of the 2022 model, this is where you're going to be trading most of the time. So right here, you want to scale down to the 1 minute chart here and wait for a sweep of liquidity. You want to wait for price to sweep a high during this macro, okay, and exactly show you pressure to the downside. So exactly, let's say right here at 7 a.m., not a time that I usually trade, but you would wait for a sweep of liquidity of a high, and then the 2022 model to the downside towards your jaw, and this would be your entry right here to target the lows. Stop loss above this high, and whatever RR it gives you, you take it, but most of the time it will be either 1 to 1 or 0.9 to 1, close to negative RR most of the time. Okay, so this is exactly what I do. So let's say right here, let's do another scenario. So right here, we are closing below the previous candle's low. Again, what do I know? I know that this low has 80% chance of being taken out. A lot of the liquidity is sitting right here. So what do I want right now? I want price to sweep an internal high. You see, we're in the macro 50. So right here, we did not sweep a high in the first portion. So it'd be the model number 2. Okay, so I would wait for price to sweep a high. Perfect. And then show me. So for me, you see this, okay? This is exactly where most of you guys before, if you trade ICT, would have entered. High, low, right here. Market structure shift right here. But you gotta understand that since this low, okay, is the H1 low, and we closed bearish on that candle, we are still in a bearish order flow. The chances of you hitting this low here is 80%. So trying to long from here is you will end up with a smelly finger 100% of the time. So right here, what would you wait for? Price to break. So either create an order block. So these are the only 3 candlestick patterns on the entry. So order block, inversion fair value gap, and breaker block. We will go super deep into those in the next few calls, but for now, let's just stick to the basics. Is there any people here that don't know what is an order block, inversion fair value gap, or a breaker block? All right, that's what's up.
Can you just go into a little bit more detail about an order block and a fair value gap?
Yeah, for sure. There was
For breaker.
you want more details on a breaker and order block, basically?
Yeah, just basically like the psychology of like how you would approach it, and like when you see it, like what do you look for, whatever. Like
I got you. But we will go super deep into those in the mentorship for sure. Just right now, I'm really trying to give you guys the
just
core.
give us a broad idea.
Exactly,
yeah.
like what I'm looking for in a day. Okay.
I see it with the wicks, kind of. I think you're like basing it off the low of the wick, and then there's like a gap where.
Hey everyone, just a quick moment. Below is the QR code for my Discord server. Feel free to join. You can also add me directly on Discord at lgamer69. For more exclusive content that can't be uploaded on YouTube, check out my Patreon here, patreon.com/legendarygamerscyberzone.
Like I kind of.
So basically, what you're looking for is any signs of weakness to go back towards these lows. You want to wait for price to break lows and reject highs in order to go short to target the low that has 80% chance of getting hit. Most people don't look at the H1 chart. So right here, you know this low is gonna get taken out. This is your thesis. You know that this low is your target, most likely gonna get taken out, and this should be your fake market structure shift. So you would wait for price to break a low okay? And any confirmation that would tell you that price wants to go down. And this is exactly where you enter. Right here on the pullback, stop loss above the structural high, and you go for a 1-to-1. Of course, it looks ugly, it looks like shit, but we're not trying to trade for aesthetics, okay? We're trying to make money. So that's one thing you gotta understand. You don't fucking care how your trade looks like. You want to win your trade, okay? And someone asked me for the way that I put my stop loss. There's micros on NQ. So if right here stop loss is 32 handles, then you just adapt it to the amount of micros that you need to put in order to have either $200 to $300 risk, okay? I'm gonna basically show you how to stack prop firm accounts and copy trade them. So for the rest, for me, I don't try to aim for more than $200, $250 per day, okay? With 5-10 accounts. So that's what I will show you. So right here, you have the break. You know for a fact this low will be taken out 80% of the time. So you have your confirmation that we're rejecting highs, breaking lows. Boom. This is where you enter. And in a few minutes, you should hit your target. Okay. This is what the model looks like. So H1, you wait for the candle to close bearish below the previous candle's low. You see right here. There's two ways to trade it. It's either you position yourself before the close, so the sweep of liquidity, so the rejection of highs and breaking of lows happened before the close. So right here, you close here, you enter, and you take out the draw immediately, or you close, boom, you close here, then you get up, then you shift, and then you take out the low. Okay, there's two ways to play that, and these are the only ways I want you guys to play this model. Okay, so is it clear for how the brief view how I view the market on that end?
I have a quick question.
Yeah.
So I understood the fact that it did close bearish and everything, and then you target the low, right?
Yeah.
But it closed. Let's say that trade is already past the 11. Let's say after the 10. You know, from
Not the
0 to 10.
Okay, you're not in the macro anymore.
Yeah, exactly. So will you still be able to trade that? It's just a little bit low probability.
Yeah, everything that is not immediate is lower probability. Let's say if the sweep did not happen between the first 10 of every hour, it's lower probability. I would probably not take that. Okay, what I would do is always try to look for this model to happen and the sweep to happen in this time. And after, I want to see a shift aggressively right after the sweep. Okay, so right here, to be honest, it is a trade worth trying, but it's kind of late. It took 24 minutes after the close to form this pattern. It is a lower probability setup. Okay, I will
Gotcha.
show you what is a high, so a A+ setup that I would bet my house on, and a setup that I would probably only either tape read or take half my size. Okay.
Gotcha.
Is there any other questions? So perfect. Okay. So let's just do other scenarios. So right here, same thing. This is the reversal pattern. Right here, you can see we swept previous candle's low, closed back inside the range. So what do I know? I know this low, this high is going to be taken out 80% of the time. This is how you track it. It's either the market is reversing, either the market is in a trend and continuing. Okay, so right here, I know price will most likely go towards this high. So my job is to either position myself before the close or after the close. So right here, let's scale down to the 1 minute chart. You can see right here, what do we have? We have an inversion for value gap right here. have what most people would enter on, a 2022 model to the downside. What these guys don't understand is that this high here is where all the liquidity is at. So you want to long when this pattern happens, when the hourly candle is closing. So right here, when do we know for a fact that we're breaking highs and rejecting lows? So right here, you see, we swept a 5-minute low. If you go on the 5-minute chart, we swept a 5-minute low right here. And so 5-minute fair value gap at what? 52. Okay, 52. So what is this? First portion of the macro. So last 10 of every hour. So here I would want to position myself before the close. So I would want to wait for, here in this case, an inversion and an order block to be created. So we broke a high here. This is where I entered. Stop loss at a 1-to-1 with this high and trying to target the H1 high here. So you would enter here, boom. It could do anything that it wants. Right here, there's a low. It's most of the time a stop hunt, and if you let it ride, you will see what it did. Okay, exactly the same exact framework. So H1 candle, you track it, then you position yourself with order blocks, breaker blocks, inversion fair value gaps. Okay, for now, I'm not gonna dive deep into the entry models. Okay, but I'll just give you what is the basis of an order block, a breaker, and an inversion. So an order block is just price breaking structure. Okay, breaking structure. It formed a high, a low, a higher high. So we have this zone should hold in order to create a new high. This is an order block. Okay, this is your plus OB. If it's too fast right now for you, I'm recording it so you guys have it again. So this is a minus OB, so bearish order block because you broke structure to the downside. Okay, this is what I would wait for in the direction of my draw to take, let's say, a long or a short to scalp the up wick or the down wick of my H1 candle. Okay, this is an order block. Oh shit. Just right here. Order. Let me send that picture again. Bruh, my fault. I quit the call. Alright. Join back. Alright, so that's an order block, okay? So that's pretty simple. What is a breaker block? A breaker block is a failed order block, okay? So a breaker block is when you create an order block. So a high, a low, a higher high, but you have this zone right here that should hold in order to create a new high, okay? But what is going to happen is that you're going to disrespect that bullish order block, which will turn into a bearish breaker, okay? So it's a failed order block. Does that make sense? So let's say to the upside, it would be this. You create a bearish order block. So you break structure to the downside. So this whole zone right here, from this low to this high, it should, if we are truly bearish, we should react to this in order to create a new low, okay? But right here, what's going to happen is that we're going to disrespect it, which will form a bullish breaker. When you disrespect a bearish order block, it turns into a bullish breaker. When you disrespect a bullish order block, it turns into a bearish breaker. So right here, plus BB, okay, super important. This is my favorite entry model and by far the best. in trading. Okay, it tells you the story the best in the 1 minute chart for sure. And then when it comes to inversion, it's just when you create a fair value gap and you close above or below the body. So right here, this is a bearish fair value gap, you see? So you close above the fair value gap, the bearish fair value gap, which you basically disrespect that PDA ring. And if you disrespect that bearish fair value gap, it turns into an inversion fair value gap. So instead of using this as your area of resistance, okay, to go to the downside, if you break above it, you would use it as support. Is that clear? So these are basically the 3 models that I play mainly for my entry models on this model right here. Okay. Is that clear, guys?
Yeah.
Perfect. All right. So right now, gave you guys a lot of information. I know it's definitely it will be hard to digest everything in the beginning, but let's do multiple scenarios of what happened this week in order for you guys to really understand the framework behind it and when to position yourself. Okay. Who right now would say that he's pretty comfortable in understanding, and who I want everyone to respond. Okay, so respond with a 1 if you really understand the framework and you think it's just a question of time to really backtest it before you can understand it perfectly, or type 1 if it's your case, so if you really understand it right now, and type 2 if it's really hard to understand what I'm saying right now and you're actually lost. So Peter, Rob, Avex, I want you guys to answer that, please. Okay, so what everyone is 1. Perfect. Let's go. That's good. That's exactly what I wanted. A group of people that are already decent at trading, so it's pretty easy to get with you guys.
I have a question though.
Yeah.
Yeah. The H1 candle, what if it closes a very small wick?
With a very small, let's say it's a bullish continuation and it's a very small up wick like this.
Yeah. Yeah.
It
So we
does
won't
not.
have much room to play with.
Yeah.
For
So
example.
yeah, basically yes, but you would. It doesn't mean that it's a bad scenario, because it's all about where did you position yourself in that candle. So did you have the sweep here before? So in the first 10, so the last 10 of the hour, so the first portion of the macro, and you had your breaker formed. So you entered right here. Let's say you entered right here, and it's starting. You're already in a position, and it's closing like this. It could be super good for you. Okay. Basically, you don't know exactly what this H1 candle will look like if you enter at 54, 55-ish, so 5 minutes before the close. But most of the time, you will have a push towards your draw. So do you understand this aspect? So we're not always waiting for this candle to close in order to position ourselves. There's the first scenario where you position yourself before, because you're predicting that you're going to break highs because of the way that the H1 candle is forming. Okay, so even if we have a small upwick here, you could already be in a trade and the close is right here. So you would just be in a trade that you will most likely win 95% of the time, because you will just open high to pop the high here. Okay, is that clear?
Yeah, it's clear.
But yes, if I understand, like let's say you did not have an entry before, so you did not give you any entry, it will be hard. You will really need to pray for this next candle to open lower, sweep, then go back up.
So that gives us enough space.
Yeah, It depends. You just basically need this new H1 candle to open in the opposite direction, which don't happen that often. If you're super close to the low, like to the high like this, you would need a really big move down first and then a push up. Okay, on the next candle. So right here, the next candle is going to open. So every 59 and 59 second, the H1 candle will close. Boom, new one will open. So right here, he's telling us, what do we do here if we're so close to the high? Then you're just basically waiting for an open low, breaker block to form, enter, boom. You guys understand?
Yeah.
Open low of the next candle.